Yo, shake my hand. What's going on YouTube? What's going on Trading Family? What's going on TikTok? I don't know where you guys are going to see this video, but welcome back to my first official trading video of 2024. And I know I've been gone for a long time. A lot of questions to ask. Where have I been? What have I been doing during my sabbatical break? It was supposed to be for a year. So that was January 2023 into January 2024. I take 1 year sabbatical breaks every 3 years just to sharpen myself. Generally speaking, work on trading psychology, number one, but also focus on the trading floor. Because outside of, the institution, the trading academy, I'm actually running a real trading floor. So it's been interesting. And I know it's into April. I got lazy. It's my fault. I got lazy with, doing the videos and content. And I felt like I was being steered off a little bit from my main purpose. I'm still keen to educate. I'm still keen to get, things done when it comes to the markets and developing retail traders. There was also a big transition with my family, but instead of spending this entire video explaining where I've been, I'm hoping you can allow me to just fill in the gaps as we go. So with each and every single video, I promise to kind of fill in the gaps, because I could talk about the incredible year I've had, and where we've been, what we've done, restructuring the organization, my family, a lot of things went down, right? So I can't actually dedicate an entire video to that. But in today's video, there are specific things I actually want to look into that I just want to cover, specifically market sentiment, where we are in the market right now. A lot of the things that I think you as traders should be paying, significant attention to. So I'm going to look at market sentiment. I'm going to look at reading the tape. Got to learn to read the tape. You got to learn to read the tape. You got to find the money, follow the money. So institutional play. And then, at the end of this video, in between, just to say thank you for watching. Thank you for staying, throughout this journey with me. I'm also going to introduce a meme coin that I've been pumping into. Bitcoin halving has happened. I'll do a separate video about that. I had promised on my social media accounts that the first video of 2024 would drop on the first weekend of May. So I'm like 10 days early. Right, today is the 21st of April. I'm doing this, right? So I just want to kind of prepare you for what's going to happen this coming week. It's not going to be like my war rooms, right? So I'm not going to go through every single chat with you in this particular video. I just want to warm up to this making video stuff, but I truly appreciate it. At any point in time you see this video help you, bless you, enlighten you about the markets, please don't forget to like. Reason being, I've been off my channel for over a year, so the algorithm thinks I'm dead and gone. So the more we like and engage with the video, it'll start to kind of just move the video towards, I still want to grow the academy, I still want to grow the family, but geez, I needed the break, and I apologize if my absence affected you. But I also hope that it also enlightened you on where your weaknesses are, right? So yes, we're going back to me dropping videos every weekend where I'll be giving you guys traders war rooms, breaking down market sentiment every single weekend. That means every single trade that I am going to take, I'll tell you before I take it right here on this channel every Sunday/Monday, all right? But you've had a year now to see, if you've been with me from the beginning, where the gap is in what you know versus what you've been taught versus how you apply. You now have your own P&L data, your profit and loss data, to know what kind of a student you are and where you can lean into it, right? I really want to emphasize this. I am not Moses, and even Moses never entered the promised land, right? So I don't want to just be the guy leading, right? Trading is an extremely personal journey between you and your own personal fight against poverty, against reshaping your destiny into generational wealth. And you're gonna see a slight different Leroy on this channel. Every time I come back from my sabbaticals, I try to come back better in my pedagogy, better in the way I teach. And also, just infuse a few other things that I've learned along the way And so I really hope this channel does bless you. If it does, don't forget to subscribe. Right. So, there's a lot of things. Also, I've got a whole new trading setup. So in this video, I'm going to look silly. I'm going to be sharing the wrong screens at the wrong times, and I apologize for that. But, in front of you right now, you should be looking at, just, a basic mapping out of the market right now. You can see tech stocks are down. And, if you ask any Jack and Jill out there, they'll tell you that tech stocks are down because of the war, Iran, Israel, that kind of stuff, and sure, we can look into that. I really want to keep this video, not too long, and, not too long for me, because I can go on for 2-3 hours teaching on markets, but I want to just cap it, at 45 minutes to an hour today, just as a warm up. And so you'll forgive me, I won't be diving into big details, but I will be giving you guys, a type of preferred analysis, a specific level at which you should be looking at the market, right? And there are a few things I would like to start off with. And I do realize that I actually didn't prepare a whiteboard for myself in the background here, right? I normally like teaching with a whiteboard, but I don't think I have that right now, right? So three key psychological programs I prefer you always have in your trading. Number one, good things do not take time. You got to break that ethos, right? And remember, we break things by writing them down, create an affirmations card. This is my 2024 affirmations card. I read this to myself out loud about, three times in the morning, 3 times in the afternoon, 3 times at night, right? It's a 5-page card about what I want to achieve, how I want to achieve it. I've been doing this for 6 years, and it actually really works, right? We can go into Think and Grow Rich. We can go into Napoleon Hill. We can go into universal principles. Like, this is an extremely important thing for traders, because trading is 80% psychological. And if the warfare in here hasn't been won, you're wasting your time, right? Because the charts will always expose you. All right. So number one, good things don't take time. You don't have to be trading for 10 years, right, for you to finally start to see the benefits of all of that. Not to say trading happens overnight, but I'm saying reset that program that you're going to have to labor and suffer forever. I labored and suffered forever in trading because I was ignorant to the right things, right? So I am here to bridge that gap, right? And my channel has always done that, right? We supply and demand traders, we smart money concepts, we're looking for liquidity, we understand sentiments, we also, dab a little bit with fundamentals, right? So the correct information is available, but I can't get into your individual head. So number one, tell yourself this every day: good things do not take time. Number two, every day, in every way, I'm getting better and better as a trader. Number three, tell yourself what I'm seeking is also seeking me, right? So if you're looking for consistent profitability, you have to believe that consistent profitability is looking for you. When you get these 3 programs in alignment with your purpose, you will start to work on the discipline needed to create the habits to become the trader you want to be. If it's your first time watching me teach, then a lot of these things look a bit offish or new to you, but just trust the process, right? Just quick announcement. I know our public Telegram channel was hijacked. I was busy. There's not much I can do about that. I'm going to move us out of all that kind of stuff. I'm going to create a private Discord. Just give me time. But before May, there's going to be a lot of structures and shifts where I know I'll be paying attention, where I can drop charts to you guys. So intraday charts, I'll drop those on the private Discord, and maybe we'll see if we can resuscitate a free public forum. But I've never really found the greater use value of such things. I don't sell signals. I don't do, a lot of weird stuff that a lot of forex mentors do. The only thing available from 365, if you can see down below there's a link somewhere to join our academy where all my lectures are there, where I walk you step by step on how to approach the markets. Outside of that, we don't do anything else. We will never trade for you. If anyone says they're trading for you and they're Leroy or 365, it's a scam, it's a lie. They're going to steal your money, and part of it is your fault, right? For being too lazy to equip yourself with information so you can do it yourself, right? So first disclaimer, educational content. Everything that I'm going to share today is just educational content, not financial advice. Even though I'm a licensed financial advisor, I am not your financial advisor. So please understand, I'm sharing information. I'll tell you what I'm going to do, is not to tell you what to do, right? Number two, when we navigate things like war, right? So some of you would, before I took my break, would have traded Russia and Ukraine, right? At the very beginning of that war, we're very active. We were chasing inflation. I was teaching you guys how to analyze FOMC. Every time FOMC went live, I'll go live with you on that channel. I'll bring that back. I taught you guys how to read market data on this particular channel. And at the same time, there was a, Ukraine-Russian war. And we looked at those markets and we were very profitable, consistently watching, right? So whatever I say on this channel, please note, my job as a financial markets analyst is to see where the money is, follow the money, attach my little money to the waves of money to make money. I am not pro-war. I am not pro this, pro that, okay? I am simply, just in case I say something that might be open to interpretation, I am anti-war. I want to be very clear about that, very unapologetic about that, right? I am very anti-war, right? But when I'm talking in terms of financial markets, and I say it's time to buy because there's a war, it doesn't mean I enjoy profiting off a war. I'm simply saying, given the market conditions that exist right now, our trading edge or strategy is telling us to buy 1, 2, 3. Therefore, as a disciplined trader, I will simply buy 1, 2, 3, right? Not necessarily because I'm so happy that there's a war going on, right? So I just want to, put that out there, right? So like I said, I want us to look at some market sentiment. If you can see right in front of you here, things are not looking, that good. We've got a lot of red around tech stocks. And if you look at NASDAQ, we finally broke out of a big range. I hope you guys were aware that it had been consolidating for a long time. I hope you guys are aware that because NASDAQ was in a consolidation for about 46 days, Bitcoin has been in a consolidation for about 45 days, but NASDAQ has broken out, and Bitcoin, last I checked yesterday when I was trading, has not yet broken out of that consolidation, but we're going to have a look at it today. Also, I stopped trading on Thursday. I'm making this video. Today is Sunday, but on Thursday afternoon and Friday into the morning, I had 3 bad trades that took an L, so I lost about 1.8% of my account on that specific account. And I took a break. But before then, it had been really, really nice. I'd been doing quite well. I thought, well, man, let's see, right? So I missed the opportunity to either hold a little bit or avoid buying too early, while my swing trades have all been sells. And we'll talk a little bit about that, right? But I think the main thing that's been driving the market for a lot of people is headlines. So just a quick reminder about news headlines. When it comes to headlines, a lot of people have this big problem. They'll be like, oh, look, man, breaking down market sell-off and the odds sell-off and odds, this 5% pullback turns into a 10% correction. And a lot of people assume that when these news come out, oh, Iran has done this, Israel has done that, etc., then the market reacts, right? So a lot of people still believe news first, market reacts after. And that's not true. You have to break that type of thinking. Markets, generally speaking, price in the future. Okay, that's number one. All markets price in the future. Number two, as a retail trader, you are involved in what we call a speculator's market. So everything that we are doing, every choice we're making to buy or sell is based on a future outcome. So already we ourselves are participating in pricing in the future. That means most and all market movements are preset previously by the flow of money at specific levels by key major players. So how key major players view the future, they will back it up. You know that saying, put your money where your mouth is? Key major players will put their money where their mouth is. They will back it up and actually show you what they're thinking. Your job and the skill that you need to acquire by joining, clicking the link down below if you haven't, is to understand how these guys view the future and also be able to track the actions behind their belief system. There are 2 things that move money in the markets. Number one, crazy conviction. Number two, a massive imbalance, which is cash money. All right. So when it comes to headlines, please avoid that mistake, right? Markets don't move because of the headlines. Headlines assist. Headlines create a catalytic moment where momentum continues. 9 out of 10 times, it's already too late for you. If you're entering price, buying or selling based on headline, you're already too late, right? You are going to be on the wrong side of that trade eventually, all right? So just be very careful about that, right? So I'm gonna start off with my favorite, since, it's my first time, doing a video with you guys this year. I really missed this, by the way. I absolutely missed this, but I also absolutely enjoyed my break. I absolutely feel refreshed. I needed to reconnect with family. We had big structures. We moved out of where we were staying, not just a house, but a whole town. My partner, not necessarily still part of 365 Trading Floor as the director of, co-op. So she was running our organizations, our give back charities, all that kind of stuff. But also she's following a passion now. She's gone back to university. She's actually a lecturer and pursuing a PhD. There are massive structural changes that I've been postponing in my life, and everyone in my life had been very patient with me and given me the time to do what I've been doing. So it was my time to give back. But yeah, let's look at the dollar. I like the dollar. The dollar is looking good. It is looking good. It is looking good. But, I want to point out something obvious. If you're in South Africa right now and I say elections are coming, you probably think I'm referring to 29 May, where, there'll be South African national elections. And that's not what I'm talking about. This is a big year for the dollar. American elections are coming in November. And that has to be your starting point. You have to remember markets are an expression of repeated behavior of specific key institutions, which are made out of people. Understanding how those people think always shows you how markets move. If you can understand the person with the ability to move the market, you are in the money. So I want to do something I once did in this channel, which I know a lot of you either forgot or it was inside a long video, so you didn't care for it. And I want to prove a point. I used ChatGPT this time around to just quickly, put in the dates for me about when, all the key elections happened. And that's fundamentally because according to my chart, the most data I could find about the US dollar was from 1967. So I asked ChatGPT, map out all the presidents, right? So who the president was and their political party, Democrats or Republican, since 1967. And then I came to the charts to just color in. Red stands for Republican, blue for, for the Democrats. Look at this. And I've done this before. I'm on the DXY. And this is our edge. So when institutions come to us to ask them to teach their flow traders stuff, it's because by training, I'm a researcher. So primarily speaking, we focus on research. We focus on reading. I love to read. I love to get real authentic information. And if you can start to develop that habit as a trader, I promise you'll go very far. And this is such a simple exercise to do. So we know here from this 1967, right, February, there you can see this is where the chart starts, right? I could have gone further back, but this is good enough. We have enough data here. So this means from 1967, I don't have that information with me close hand now to see who was what and who was who. In terms of the actual names of the presidents, I left it somewhere. But when I edit this video, I'll put it somewhere here on the screen for you. I apologize for that. I must have kind of gotten rid of it a long time ago. Right. Anyways, so Republicans won. Right. Let's put it that way. Right. So we've got Republicans. And what I want you to focus on is the motion of price for the dollar. Right. So you can see here from 1967, the dollar drops. Right. And then Democrats take over in 1977, right? So we've got that, and they create this, little downside. If you've done my course, you'll know, the very first supply and demand you need to master is major turning points. So the Democrats create a major turning point, a major demand to push price up. And then the next election after that, all elections, generally speaking, happen in November, have always happened in the first week of November, have always happened in the first week of November. Let's get to the basics. Banks think in 3 months, financial quarters, right? In a 1-year take profit target in a 10-year span. Elections are every 4 years, so you can factor that in. So I'm telling you that in 2024, I'm going to be looking at the last financial quarter, which is quarter number 3 of the year, before the elections, to set up my swing to positional trades like I've always done in every election. All right. So when I tell you that we're going to do the war rooms from May, so there's still enough time for you to join us. There is no fee in joining us. You just trade what you feel you want to trade. I'm just going to tell you what I'm going to be looking at. You just need to be subscribed to the channel. All right. Now, when the Democrats take over, this is up until the 1980s, the 3rd of November, 1980, Republicans win. So it's one of the Bushes, I assume, I can't remember, or it's Reagan. I had this information somewhere, but it's just too far now. I could find it. If I didn't want to be lazy. Right. And then all of a sudden they push it up. I guess the Republicans win again, and then they push the dollar down. Right. So first time, dollar pushed down. Right. Democrats try and pump it up. Right. Set it up for a good all-time high. Right. Which is somewhere there in 1985. And then Republicans win again. And then, the dollar is pushed all the way down. And then it comes 1992. Again, we find Democrats picking up, price of the dollar, strengthening the dollar. This is just the DXY. I'm just trying to find a relationship between political parties and how the US dollar relates to who's in charge. That's what I'm doing here. I'm not trading yet. I'm just trying to make a comparative analysis. And for some reason, whenever Democrats take over, they take over at the bottom of the dollar and shoot price up, right? So we get Democrats again right here, right, in about 1992, November, and then we've got this upward movement, we've got some consolidation, we've got stronger demands being formed, and then boom, the dollar explodes, and then here we are now all the way to, the early 2000s, right, and you'll know the big events in 2000s in America, right, and there we've got the Republicans taking over. I don't want to get into conspiracy theories, but, each to their own, and Republicans are in charge. They create big supplies, push the dollar down. Here comes Barack Obama. He did 2 terms, right? All the way down here. And what does Barack Obama's presidency do? It relatively takes the dollar back up, and then Trump takes over, Trump's supply, right? Trump brings it back down, right? And then back down there. And then when Biden takes over, the dollar is already inside a demand. And then this is now Biden's reign. And I'm saying this year, we are coming towards another, election, and price right now is flirting around the supply, not a major turning point supply, but nonetheless quite a significant supply. The last time you can imagine the dollar was here was in the early 2000s, right? So this is almost 2 decades ago, where price was playing at these levels, right? And you can see historically, it's a nice supply area, historically speaking, right? So price is about to get up there. And we, if you're paying attention in April, NFP April plus CPI April, and we'll go back and look at the data, we just absolutely have confirmation that Powell will not be smoking any high nonsense for a very long time, and rate cuts are not coming anytime soon based on what we saw the data tell us for April. The data told us, look, man, inflation is still high. CPI number was hot, right? So we've got dollar strength. We've got a macro policy, a fundamental underlying policy that the dollar is going to be strong for a while, right? That you can't slow down. You can't cut rates because you still have an inflation problem that we last dealt with on this channel over a year ago, right? I explained all this stuff every week, and I'll do it. Repetition is key. I don't mind repeating stuff, right? Until you all get it. And for the new people, you'll benefit as well, right? So I thought this would be a cool exercise to start off with, right? So understand these patterns, right? And this helps because, towards the closer we get to the election, the better we can start to position our long-term trades, sentimentally speaking, right? Right. So then the next chart that I want to look at, like I say, is not really a war room thing. I'll point out some trade ideas if they pop up on the screen, but I'm not really into signals today, right? Today, I really want to explain what's going on, right? I try to keep all my charts, the same from the last time I was online with you about a year ago. And you can see this is the infamous NASDAQ. This chart made me, quite a significant. And by the way, guys, I'm more active during bearish seasons. In the trading flow, we're separated according to strengths, analysis strengths, trading strengths, and also time frame strengths. So some of us are short-term traders, some of us are swing traders like myself, and I really don't care about a bullish market, right? According to my trading journals, historically speaking, I make most of my money during a bear market and in a bull market, even though, the joke is everyone is a genius during bullish markets, right? So you can see here, Fed was printing money, monetary policy. They were printing money during COVID, print. Oh, want some unemployment grants, right? Trump was really about that life. Powell and Trump were printing a whole lot of money, and then that created a whole lot of inflation. And I traded this entire downturn side with you into the Ukrainian war and all that kind of stuff. And this was when the Fed was tightening by raising interest rates. So when you raise interest rates, the stock market takes a hit because all the money goes to yields and the dollar. And I just told you that if you look at April data, inflation is still high. So you're going to have to keep tightening, right? You're not going to cut any rates right now. And you might actually start to see this. So eventually, at the beginning of the year, January-ish, last year and this year, Powell started to become a bit dovish. They started to assume that inflation under control. And you can see once you have inflation under control, your dollar drops and your stocks go up, right? So this is kind of like what, we've missed together. I was a little bit sour, by the way, about this bottom here, right? It took me a while to be convinced until some supplies up here were taken out, but we weren't really talking. This was the beginning of my sabbatical. And the reason for that was I always hoped and wanted my price to come back to 2020 COVID demands, right? I was really, you should have seen the number of buy orders I'd loaded up in this area, right? This was the first time I was going to be a market bull was if price had reached there. Until then, I was very bearish until, price disciplined me and told me they'll do what they want, not what I want, right? So now we're going to get out of the monthly charts just so we can see this chart a little bit clearer. The red lines don't represent supply, support and resistance. The red lines represent how we trade at 365 Trading Academy, understanding the significance of very specific key areas in the markets. And all that stuff is covered in our course, by the way, right? So I really hope you guys were paying attention, right? This really just happened a few days ago. I'm on NASDAQ right now on the daily chart. This is Friday, this is Thursday, this is Wednesday, this is Tuesday, and it's Monday. Only this past Monday, right, did markets break out of this range. Now, this is the lowest part of the range for a while. So I'll put that at 29 February. It made the first high of the range in about 21 March. And then we broke out somewhere here in about 15, 16 April, right, out of this range. And this range was very important because, if you really understand price will accumulate, manipulate, and then distribute, right? So we had an accumulation phase, and it was the battle of buyers and sellers. But really, institutionally speaking, there was a lot of accumulation. And now, NASDAQ has led the way with a strong break in price, and right, and your headlines might make you think, fine. A lot of this has got to do with Iran and Israel. A lot of this has got to do with, Bitcoin falling. Bitcoin is falling because Grayscale was selling, and also the war, and also, fear in the market space, etc. Whatever floats your boat. The point here is once a big consolidation range like this is broken, you've got clean market direction up until a significant demand, right? NASDAQ, unlike most charts, is very close to a demand that could change the game, flip the switch. And this is this weekly area here, roughly around about, 1700 or 16900 or so, right? So we'll just see how markets open tomorrow, Monday. I hope you guys get this video on time. But you've got a good feeling about how it's going to go. So this is the 1 week that just happened this past Monday, right? And let me just get my dates out so that we're not confused here. When I say Monday, I'm referring to the 15th of April up until the 19th of April. This long, big candlestick here represents that type of trading activity. And you can see, man, this is one big crazy red candlestick. So it might get filled up. If we go to the daily time frame, we have a lot of interesting levels, right? So I think we're still, in the market for some pain. And that's just me. And I really will be paying close attention to what happens when price gets there. And absolutely, you're seeing me correctly. I am on the daily time frame. If I'm not intraday trading, I'll use my 1 hour chart. But otherwise, for my swing trades, I'm looking at the daily. Full disclosure, because we have not been together for a very long time, I am holding a few cells up above. So if anything happens here, I technically am still covered. So please just use extreme caution. If you go to the H4 time frame, you get much more better data, because on H4 you get a feeling of new supplies or new demands being created, which kind of like gives you good direction, right? Number two, you get very strong liquidity levels being broken, right? So I wouldn't be surprised if on the daily time frame I have to wait for about another week to 2 weeks. While intraday traders might not have to wait that long. Number one. Number two, I would not be surprised if I haven't taught so long, right? There you go. I even forgot where my tools are. I wouldn't be surprised if something like this was to happen, and then price continues down from there, right? So from somewhere up here and then continues down. Though my edge does not like me taking these levels seriously. As long as there's a higher supply, I'd rather wait for that. So I'll be interested in seeing how price reacts here. So I'm just going to be watching this level. If price takes the supply out, then it's all good in the hood for me. If price does not take that area out and price actually chooses to respect that area, then I maintain holding my previous sells. And if it's your first time, and by first time, I mean if you're not yet in any holding positions or for price here, then you're going to have to think it through. Apologies, guys. I haven't taught anyone, this stuff in a long time. So I'm trying to, there was a specific tool. I think it's the path, right? So I'm saying if this happens, I'll be watching. If they create some equal highs, I'll be watching here, because they're building up some liquidity. They're building up some sell stops here. And then I'll then expect something like that to happen. And then I want to join when it looks like that, right? So something like that, short-term consolidation into the supply, a breakout. But if that doesn't happen, all good in the hood. Just watch out for this, right? So overall, I still have I'm a bit more bearish still on the Nasdaq, but I am aware that Nasdaq, when you look at all the other assets, if there's time, we can go through them, is very close to a weekly demand, right? So we should expect to push up, right? If I go back to the daily time frame and I pull out volume-based candlesticks, because those also give a non-biased reading, you can see, on Friday, markets really stopped, at just an equalizing, a psychological place. You can see, if you're a support and resistance drawer, you'd be very happy to start buying here on Monday, right? Maybe the candlestick opens here midnight today, Sunday going up. And right below that is a daily demand, right? So I'm really waiting to see, historically speaking, when we were buying a long time ago, this was a retracement area for buyers, and I'm sure price might want to fill that area, right? But on the daily time frame, even where I want to sell, we don't really have the type of order flow that would really qualify it. But it's far much more better than the H4 level, which is slightly lower, somewhere down here, right? So I'll still wait for that, me personally. But remember, I'm a swing trader, very patient in the markets type of trader, right? But the most important thing about Nasdaq that I need you to take home is there was a consolidation, and I hope you were aware of that, and I hope you knew what to do there, and I hope breaking out of a consolidation, you now know what that means. It means we absolutely have, more reasons to be more bearish than bullish. That's what it means, right? If you start drawing some fancy trend lines on the left here, right, just to look for that, technical analysis, I'll go with 1, 2 points. 1 and then 2. Some people might make their trend lines tighter. It really makes no difference, but it's not a coincidence that the trend line is broken by my supply order block, right? So I'm waiting for that personally. right on you. I've got a couple of smaller cells on H2, H4 right at the top there, where we first where I started to assume that maybe this might break break up, right? So it's a very clean selling area, beautiful imbalance, clean cells. Your stop loss would have just been above there, and if you were patient enough, you would have you would have let it rip. The reason why this would not have scared you is, if you remember, I've taught you many times, always pull out your Fibonacci. You'd have known that this is a retracement area, seller's retracement. Boom, we've got a beautiful golden ratio touch, and markets continue to drop, right? So we do have probably unfilled orders there as well. But right now, my concern is that there is a daily supply that I want to see play out first, right? So I'll be holding those cells and then hoping to add here, right? But you do as whatever moves you as usual. I'm just here to share what I see in the markets, right? So that's Nasdaq. Another one that we can look at quickly is the SP 500. Man, I hope this is helping you. I promise you it's going to become more consistent, especially from May. Right? I'd say I'll be back in May, all right? Because I'm still not yet ready to sell off a lot of my time. To do all this kind of stuff means, another thing, I was in the office from 7 a.m. until about 4 p.m. every single day. As a floor trader, I trade the London session, so I have 2 hours to prep before the markets open at 9 a.m. South African time. I have to drop kids off because I'm the one leaving anyways in the morning. And then at 4 I get back, and then I'll do videos with you guys. I'd cover live things. I'd miss dinners with the kids. I'd miss bedtime routines. So just a lot, man. I miss my family. So I had to take a break, and it will happen again, another 3 years from now. So please bear that in mind. Please, I know it's difficult when, someone disappears in your life, but also just bear in mind that my job is to empower you for moments like those, right? So S&P 500, let's get that big overview, right? Look at this. Look at the structure. I mean, guys, I come alive in bear markets. And then I start praying for, obnoxious, crazy moves. I mean, if I was to catch all of this, payday, happy payday, right? I mean, that's what it's about, getting into positions, holding them for as long as you can, without greed, holding them with the knowledge of where markets will turn. And that's what we do within our module 1, link down below. It's really a good course that I put together, and that I'll be adding to, by the way, this year, right? So on the daily time frame, on the weekly, which is where that Nasdaq kind of like stopped, right? There we go. You see what I mean? Well, I don't know if I said it, but I'll say it now. Nasdaq and S&P 500 are the only 2 charts that I feel like are very close to being able to start retracing, right? Can you see on the weekly? This is interesting, right? So how S&P negotiates around this level here, the level 5,000, so to speak, 5,000 plus or 5,000 minus is going to be what we'll be paying attention to this week, because this really, should be a good place to start going bullish, right? This should be a good place to start going bullish. If we draw a bullish Fibonacci from the last swing low to the swing high, you will see that, all of it, right? We're on that 50%, golden ratio area. So it's not surprising. It's really not surprising to expect a retracement to the upside, which is what I'm not interested in. I want to just sell, right? And on the daily time frame, we're looking at this level here. We can switch to a Kinihashi to block out some of the noise. And you can see nothing changes. Order blocks that I taught you guys in my module 1. Imbalance rule, all of them are at play. Long wicks though, right? Long wicks, serious fight between buyers and sellers, right? And if we get the same feel, right? So we're looking at something like this, maybe, I don't know, but that's what I'll be looking at. I did close my S&P 500 cells, so I don't have any current cells I'm holding here. If I remember, I'll put some screen grab of all the different trades I've been taking this month only. I don't know if I remember to screenshot all of them as I was preparing to come back to you guys, but this is something to look out for, right? S&P 500 on the monthly time frame is looking hella bearish, but there's still some stuff to collect here, right? So this level 5,200, within, all the way to 5.1 is very, very interesting. Very, very interesting. I'll be looking out for that. It's quite a big area of value, but if you're swinging and you're looking for 1:3, you should not have a problem, right? So I'm not entirely sure if something has gone wrong. I know you guys can still see me, hear me, but I just don't know if I'm going through a short midterm network break and you can't see my screen. I apologize for that. Yeah, definitely. Right, but it'll come back. It'll come back. So I'll keep talking while it loads in the background. Right, so this is the kind of things you should be looking out for. I mean, you can do the exact same thing at your own time around US 30. Just apologies in the background. Let everything just load up. Geez Louise, got worse. It got worse. Well, might as well use this time to connect. Did I do the shake my hand? Shake my hand, guys. 365. Missed you guys. Hope you guys are good. As usual, like I did say, I am back slowly, 80% back. But I'll be back for real, from May onwards. Apologies for the technical glitch. I did hear something fall in the other room, so God knows what my little kids are doing and what they have done to our network here. It's a little bit annoying. I might have to stop the video here, and then, me, I hardly ever edit things out, so you're just going to hear me rambling like this. But let me quickly try and reconnect. If not, I'll hit the house intercom. All right. Okay, I'm back on, but just give me a second. Give me a second. Right, anyways, US 30, all that kind of stuff, very similar. Please look into it. I see the recording is still with me, so I didn't lose the recording. I'm sorry. This is the kind of things I should edit out, but you'll see I won't, because I'm just not built like that in terms of time. Give it to you nice and raw here, nice and authentic. Sorry for that. Everything is just rebooting. Right, so in front of you, you should have S&P 500. I do apologize for that. Welcome to Africa. And the place we stay in, there's still no fiber. It's one of what you won't do for love. I keep telling my partner, if it wasn't for her, I would not be in this town. Right. So we've got a clean drop, S&P 500. So, I've laid that out. That's what I'm waiting for. I just want to quickly move on because I feel like we've wasted a lot of time here. US 30, tricky, but very good. Golden. I'm still holding this, and I'll tell you why. US 30 is an interesting maniac, but when he or she moves, right? And you can see this was a beautiful trade to take, and I should have closed it on Friday, and I didn't. So I will be looking to close it as soon as the markets open tonight. I don't see the point of holding it or assuming we're going for, a high beyond this. I don't have proof that we're going to go any higher than this. So I will be closing this, but this was a very, very good trade. Because the dollar was up, by the way, and I'll walk you through the analysis now. I was on USD JPY just to mirror in that dollar strength as well. So this is a very good trade. There's nothing I can tell you. I wouldn't buy again. I'm going to have to wait to get that confirmation to sell. But if you look at the governing time frame on US 30, you'll see stuff like this, right? So you see, this is what I wanted to see on NASDAQ. Right. If you remember my crazy videos in 2022, 2023, before I disappeared, I kept saying these indices must come back to the printing money demands of 2020. And US 30 did not fail, right? It came back. This is marked in red just to highlight the fact, right? Not that this is a danger zone, right? This was a beautiful, beautiful sweeping area. Price coming in 2 years, 2 years and a bit later, or during red October, and price went. But look carefully at the governing time frame here. So I've been selling and buying US 30 because it's been very clean and easier to read. Pick your charts. In 2024, I'm going to tell you a couple of things. Number one, this is the year for the race for rate cuts. I'll get into that, right? But that's very important. That's number one. Number two, not everything needs to be traded. You got to trade what's moving fluidly based on what you understand in the markets. And now we can see, US 30 has been stuck since November, right? 2 years ago in a consolidation. This is like a crazy, give or take 1 year, something months consolidation, right? Sideways. And we've had a bearish engulfing pattern inside, clean bearish engulfing pattern. But now, depending on how the month of April ends, we might have a bullish engulfing pattern inside, right? And we are on the other side of the structure, right? So this is going to be very interesting because remember, outside of this consolidation above, you're going for an all-time high, which really doesn't make sense to me right now, right? So I wouldn't be surprised if the range follows the lead for NASDAQ, and we're looking at a drop down here, right? But we'll see how this plays out. On the daily time frame, like I say, not really keen to do much in terms of swings this week because I have to close this out. On your intraday time frame, smaller time frames, then you might start to take the opportunity to start to sell down. Remember, these indices all correlate. They just move slower. They move slower. So we're looking for who broke out of the consolidation first, NASDAQ. Which direction did it go into things? NASDAQ dropped, yeah? And then will the other indices follow? Like, that's a basic good way to set up a trading idea. The last index I'll look at with you guys, is, Russell, and I'm a love of the Russell 2000 because Russell 2000 is very sensitive to macro data, CPI reports, really how things are going on the ground. So, this, I think I took a hit here, but a while back, roughly at the beginning of April, and lo and behold, price dropped below. So now I'm just waiting. See these little bounce backs at these levels? I'm waiting for something like this now. I'm just going to wait for it. If there's good confirmation at the time on the Russell, and I'm happy with the type of data, whether it's NFP for May, whatever will be at play, this is kind of like the stuff I'm looking at. This is a supply that broke a previous demand. So now I can do this, now that you guys have seen it. That's number one. And I know that, right above that is a better supply. So, sometimes I go smaller lot size on the first supply, bigger lot size on the higher supply because we sell high, buy low always, right? But I also am cognizant of the fact that price might not make it to this supply if this is strong enough and the sentiment that we're in is sell, 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 right? And we know, like I said, NASDAQ is 1 full week ahead of the pack in breaking out of consolidation, dropping. This is important, right? I'm building something here with you, right? So this is the Russell here. If this week is good, then we're looking for this, and then we're looking for that, right? To sweep this area down here and then potentially come down there, right? So this is good money. This is good money. If it happens that way, all right, 200 points on the Russell, good risk management equals good money. Right, so we shall see. Actually, let me just leave that in there because now that these are back to our charts, my charts are your charts, right? So real quick now, out of sight of indices, I'm going to show you NASDAQ one more time. Right, show you this one more time. You see this? Consolidation, roughly 28, 29 February. Then we break out, these ads are annoying. We break out 15 April, and I think, if I remember correctly in my trading journal, I wrote 46 days, but I can triple confirm that with you. So if we go from the low, which is there, and then we go off to the day we broke out, which is there. No, I didn't get that right. I apologize. Let's start again. Let's start again. Right. So once again, I'm coming here, the low, which is low of the range, right? Which is the 29th of February, and then I'm going to drag it all the way to breaking out of the range, which is there. You can see there 31 bars and 46 days, right? So that's how long that range took, 46 days, right? So now I want to go to Bitcoin. And then I want to see, man, because guys, markets correlate, they positively correlate and they negatively correlate. If you follow me on social media, once in a blue while, I'm not trying to get you guys to follow me on social media because I don't do it all the time, but on my stories, I'll post a few charts, I'll post a few things that are happening in the markets once in a while. So this is really not a big deal. But I did talk about this. I put this one too, and I explained it. I explained what I was looking for, and it's playing out. And I did this about a month ago, right? So this is the Bitcoin low in the range, the beginning of the range, which is 5 March. So 29 February is the low for NASDAQ, and then it happens on the 5th of March. This is interesting because then it seems like, and it sounds like to me, if I go back up my calendar, which you can't see, quickly, 29 March, 1, 2, 3, so 5 days. There are 5 days later, Bitcoin then also starts the low of its range, which is here. Okay, so 5 days after NASDAQ does something, Bitcoin does something. And then you can see up until this past Friday, this is today's candle, Sunday, we're now on day 47. So, one would wonder what's going to happen after 5 days plus 46. 46 days, the range of NASDAQ plus 5 days. Bearing in mind, we just got done with Bitcoin halving, right? And I want to do a separate video for that. A lot of people think because halving was successful and it happened about 48 or 24 hours ago or 72 hours ago, depending on when you see this video, that now we're going to 100,000. Wake up. The data is there. Every time Bitcoin does halving, it's on the charts. Look at how long it takes to consolidate before it explodes. Every time we hit an all-time high, Bitcoin drops. Look, all of this repetitive behavior of the big money, we can study it. I promise you, people are their habits. And because people are habitual creatures, we can anticipate what they're going to do next, right? So would it not be logical to assume that Bitcoin might follow the direction of NASDAQ? NASDAQ being a big conglomerate tech stock, and we all on this channel, I've showed you guys the positive correlation between NASDAQ stocks and Bitcoin. Like this is a very simple, very simple, precise movement. These two white lines, please don't get confused. I'm just mapping out some liquidity areas, which pretty much are almost taken out right now. And then after that, we get into phase 2, which is a free fall, into phase 3, which is a very good buying area. This is the area that I really want us to pay attention to. That I am paying attention to. I am absolutely, paying attention to this area and very interested to see what is going to happen when price gets here. From here to our last all-time highs, right? So, or not all-time highs per se, but yeah, sure, all-time highs, all the way down here is a very good number. If we get a 20 to 30% drop, there we go, 30% drop. That's a good number. Bitcoin, generally speaking, will drop 30% after a big all-time high consolidation before it shoots up. And right there seems to be a situation where a previous supply was taken out. That's why this area is marked red, right? A very strong supply here was taken out in the past at this level, right? 1, 2, these two supplies. Shame, you probably still can't see. Let me just keep zooming in for you. I'm on the daily time frame. Might even make it easier for you if I go to the weekly, right? So this area here, more like this area, but this area too. But let's go to the weekly time frame. Don't do this to me. Right, there we go. Right, so not the strongest, right? So that's why it was bullied, but you can see right there, we've got some type of strong consolidation range going up, and then markets bounce back when they come in, hit that area where we knew we're coming for 30K. If you're trading with me back then, we spoke about this area a lot, right? This whole red zone here is a good place for price to bounce back, right? In terms of psychological levels, anyways, 30%. If 3 doesn't hold and we drop even lower, I'm technically happy, but I'm very interested in buying at 3, right? Look at what it looks like structure-wise on the weekly time frame now. You saw on the daily there were too many extra candles, but look at how clean it is on the weekly time frame, right? So I wouldn't be surprised if we see a further drop. Now, if your analysis tells you this thing is falling because of the war, then that's up to you, right? But I can tell you that grayscale somewhere up here had been selling and dumping a lot of their Bitcoins, right? So they did create a running supply, number one. Number two, there's always going to be dumping before Bitcoin halving. That's the whole point. Make it more scarce, right? Restrict the supply, right? Number three, this doesn't mean the bull market is over, all right? Please be very careful. We need retracements in markets. Markets are allowed to retrace. If you pull up a Fibonacci from here to there, you'll get the same answer. Etc. So, and then also, if you go to coin market, right, you'll see, I mean, it's unfortunate I'm only doing this video now, but had I done this video about 2 weeks ago, you would have been surprised at the insanity of the fear and greed index, right? People were just greedy, buying at 73, 72, really just pushing it, really just pushing it, right? And you'll see now, this is stuck on screen 5. Ugh, look at me, very confused. Apologies, right? So I'm just trying to pull, pop up the fear index for you, but it's let's do it this way, right? And then let's come here, right? So that should be okay. So it's 62% now, right? Which is still quite high, but like I said, had this happened, give or take, had I managed to, I guess, share this video with you guys or do this video much more earlier with you guys, you would have noticed that the fear index was above 70, really just trying to load it up to your screen right there. So around 62%, right? So markets punish greed, right? There's no getting around that. Markets will always punish greed. And right now, we're just at the greedy side of everything, right? Greedy side of everything. And so I really feel like there's still more pain to come in the market. It's just a little bit better, right? But 62% greed, right? Anything up here, you're going to get a market top, right? Whether it's fear-based, fear-induced based, greed-based, FOMO-based, it doesn't matter. Someone's going to cash in on their longs. And markets will fall, right? Markets will punish excessive greed. So, I wouldn't be crazily shocked for a 30% drop from the all-time high of Bitcoin and a 50% drop in altcoins, which is really where all the money is, right? If you know your markets, well, you know that generally speaking, we like a 50% cutoff. Once again, these things present themselves before a big event. And there are many videos on this channel where I covered this, several times, absolutely covered it in its entirety. So please trade and invest, smartly, right? If you're in it, be in it to win it, right? So that's my Bitcoin analysis. One of the few trades I did say on Thursday, I actually got a hit. I lost about 1.8%, was because I kept adding to my sales. Right? I've been adding to a lot of sales, and I got caught up. Really got caught up, and I messed up. So I want to show you guys where I messed up on Thursday, and definitely when I came back, there were a couple of stop loss hits on my account, and I thought, oh well, let me just stop for the week. Right, I can't really remember now. Where is it? Right, but probably tried to sell somewhere here, but this is Friday, so I actually sold somewhere. Yeah, I probably sold here. Friday, I had a pin in order here, I had a pin in order there, and there was another lower level, one of these levels here, Wednesday, Thursday, where I thought price was going my way, absolutely. Completely ignored the sweep here. When I woke up, this happens around 1 a.m., 5 a.m. By the time I woke up, markets were hella bullish. I thought, okay, fine, they'll retrace here. Nope, I got stopped out from my sell positions, right? So right now, I'm staying out of this. I've really enjoyed selling Bitcoin as a trade, not the asset. And don't sell my crypto, but as a trader, I've enjoyed selling it. But right now, markets have turned, and because remember, I was anticipating a break out of this range like NASDAQ. That's my current trading idea. I was anticipating a break, and markets didn't do that, right? So hopefully a better contact to a stronger supply might then encourage that right now. And on the daily time frame, we really don't have, pretty levels like we did in the NASDAQ, right? So wouldn't it be interesting if now that Bitcoin halving is done and Leroy is wrong in this particular situation, NASDAQ on the other end starts to retrace up because it's already broken out of its range, accumulation, manipulation, and then distribution, right? So I would be caught on the wrong side of the trade. And that does happen. That just this markets for you. Only thing you can control in the markets are your risks, right? You have to mitigate and control your risks. And I'm trying to point to show you guys exactly what I mean. There we go. So I'm saying, what if this just happens? Then price from here onwards just keeps going up. And then what would mean is on the NASDAQ chart, because NASDAQ is broken out of the range, NASDAQ was simply trying to find a good demand to do the exact same thing, because for the most part, these two assets are generally always moving parallel. So Bitcoin would just take over, leading into a bull market, right? So that's like the antithesis of my thesis, right? The opposite of my trade idea for you to have in mind, right? But this would be very nice. This would be much preferred. Much preferred. This will be much preferred, right? So please be on the lookout for that. Right now, before you zone out and you lose our focus, I just wanna go back to my the next phase of this particular video. I know I'm already tapping into your concentration levels, and it's time to stop. But there are a couple of things I want to bring up. Again, going back to the dollar. Now that I've kind of like done an overview of the markets and really scanned, a couple of assets, not all of them, but the major players, there are a couple of things I want you to know. Outside of election year, actually, let's use this chart, right? So this is that USD JPY chart I was telling you guys about that's doing stinkingly well right now. And that's simply because, look, man, dollar is strong. CPI happened, and maybe I should walk you guys, through that kind of stuff again. But right, so and just watch. Let's actually go to monthly. Let's go to the monthly time frame, and we're looking at this level here, right? So this is really, and maybe blue isn't the best color now because now we've got the Democratic blue on the monthly time, right? So just below supply. 105, 106. This is an extremely psychological area for the charts on the DXY, right? Now the supply was created around about that age. On the other side, the demand was created around about that range, high liquidity areas, supply just above that range. It's a massive turning point. The demand, price pumps right above that range, supply around about that range, supply around about range. Please tell me you get it, because I know you do. You're smart. You get it, right? So 105 and 106 are our psychological areas. Sorry, kind of like doesn't look straight no more, right? Our psychological areas for the US dollar, and that's very important. So whenever the dollar breaks above this area, and I've already explained why. I'm going to show you why, but I've kind of already explained it, right? The data indicates that America is nowhere close to dealing with inflation. Okay, number one. Number two, in the background, we know America is approaching a US election. So the dollar is also setting up for the next 4 years, right? Because remember, when Republicans come, I'm not saying the next president is going to be Republican. I'm just saying the dollar seems to be pushing up, right? And those guys like to move from supplies to down. And then when Democrats come, price somehow, coincidentally, unplanned, unprovoked, very random, as well as the demand. I don't know what you want me to say, right? So this, when this happens, right, when this psychological move happens, where that bridge from 105 to 106 is broken and above, it becomes a big deal, right? It becomes a big deal. Generally speaking, we become very dollar positive, number one. Number two, yields go up as well, right? And that's not because of this level, but I'm just saying that there's an extreme parallel, a sequence, right? So now let's remind each other about a few basic things. Remember, if DXY gets to really strong, NASDAQ and Bitcoin risk-on assets, right, will always take a hit. Because what we are looking at in the charts is where people are placing money for ROI, rate of return. That's all it is. Where will big investors want to put their money? Are they going to put it in stocks, or they're going to take it out in stocks and buy yields? Which one is better? And that rotational flow of money is literally contingent on market environments. And right now, we now know for a fact that based on April CPI data, and maybe I should pull it up right now and kind of like show it to you, but based on that kind of CPI data we got, that markets right now are not a fun place based on inflation, right? It's very hard, it's very inflationary right now. Let's quickly see if we can pull up some charts for you, not charts, sorry, data. All right, so I'm gonna go into, do I not have it open? I just want you guys to take my word for it, and then it's like, well, where is he getting the stuff? And the stuff happened in front of you, right? So let's go back to the beginning of April. I'm on Forex Factory where we get our data. I will go back to teaching you guys, the routine. Open this first, open that first. But, I have spent a lot of time preparing you guys, right? So this is Monday, the 1st of April, April Fool's Day. Nothing really happened in the market. We were looking for Friday. So Friday was going to be NFP. Right? So Friday comes on April, right? And look at USD stuff. So let's talk about it, right? Average hourly earnings on month remain the same. Non-farm NFP, right? More jobs were created. More human beings got employed. More people got buying power. More people got the ability to earn money so they can spend. Number one. Number two, unemployment rate dropped. So we're creating more jobs and unemployment rate is dropping, right? And the average earnings stayed the same. Cool. So already there is still that stimulation in the economy because NFP is positive. But that's not the only important piece of information. After NFP, what happens? The following week, we get CPI, Consumer Price Index. Now that's important. I can't remember which day it was. Right, there we go. Now, please follow me here. Right, so we got core CPI, the very core. This is month over month. So it's a turnover on a month to month. The markets expected 0.3%. We went to 0.4. Already that's bullish for the dollar. Already it's saying inflation is still up. Okay, but if you thought month on month was bad, remember when I sit down on those lives I do when the FOMC is talking and I pause and I break stuff down, this is what you need to understand. CPI annualized year to year is 3.5%. Powell, when I was on my break, right? If you followed some of the meetings, I was still following the meetings. Powell's goal is to get this number, right? This number in front of you here, this 3.5%. The goal of the FOMC to know that they have succeeded in choking and killing the inflationary beast that they created is to get that number to 2%. 2% is the goal. And it is not looking like that. So it was on the 14th of November, 2003, was the first time in a long time, right? We could look for more data, we could look for more, but look at this. So we're at 3.7, right? This was very high. And then in November, last year, 2023, when Powell is getting dovish, this is one of the reasons why it's dovish. Because in November, let's go to the charts. I be feeling like we need to go to the charts. We'll come back here. Let's go to the charts. Now, let's go to the monthly time frame. Now, come on. Now, let's find November 2023. This is December. Look at this. Can't make this up. I'm getting excited. Video is too long. All the other people are gone now. They've stopped watching. They're like, this guy is taking forever. I'm helping you here. The dollar is pushing crazy, breaking the psychological area from 105 to 106. The dollar is tap dancing in a supply. The supply was created in November 2023. In November 2023 was the first time in a long time it looked like inflation was dropping. And so the dollar loses power because money is now going back into stocks where risk on, right? No need for a safe haven. And we get this bullish bearish engulfing pattern, right? A sell signal. And lo and behold, right? Every dog has its day. Price has come back looking hella bullish for this particular supply right now around that psychological area. Do you see this? I know you see it, but do you see it, right? This is crazy, man, right? So now let's go back to the data, because if you don't get this, you're never going to see the money reflect in your P&L. Trading is one of the hardest things you'll ever do to make easy money. That's because the other person on the other side makes money based on their level of understanding. It is one of the only places where that Bible verse really applies. My people perish due to lack of knowledge. The less you know in the markets, the less your chances are of making a dime. All right. So you really have to be, as sharp as possible and avoiding false information, right? So check this out. So back to the date, right? So we get 3.7, and then a big drop to 3.2. Powell's like, yo, I'm dovish now. We're going to do rate cuts. If we go back, if we roll the tape, you'll see them starting to promise rate cuts after rate cuts. And then they expect 3.1 in December, and we get 3.1. Oh, wow, this is going well, right? Inflation is under control. And then comes January, a lot of spending happening Christmas, and now we're back to reality. 3.4, 3.1, 3.2. And then they expect 3.4 annualized, and boom, what did they get? 3.5%, right? So then the dollar gains. So the inflationary problem is a sticky issue, and the possibilities for the dollar of more rate cuts coming have been pushed back. And this is very important, right? So if you look at the April CPI, and this is how you anticipate the data. So May NFP, wages, unemployment rate, May CPI, month over month, year over year, that data is coming. Whether Leroy James Siri is alive on this earth to do these videos for you or not, you now know what to look for to really help you make money. Because when this data comes in, the structure will be ready. You follow what the data tells you because the structure happened a long time ago. Using supply and demand, you jump in on the wave, the right direction. All right. So this annualized number is extremely important. They're all important, but remember here we're aiming for 2%. And you can see, man, this is a pipe dream. When last was Powell remotely close to 2%? Right? This was when I was trading with you guys, right? 1.7, 2021. 2021, April, March. That was the last time they saw this 2%. Since then, inflation has been on the craziest, incline, hit levels like 8%, and then slowly on the decline. But this means something in an election year, ladies and gentlemen. It means we have possibilities of rate cuts being pushed away. We have a setup being set up for November, election year, for a specific political party that's going to be democratically elected, sure, and we've got money flowing to prepare us for that, and wars left, right, and center to distract us from the truth. Now, remember, the FOMC are trying to keep the interest rate high. They will do whatever they can to keep it high so as to cool off the economy. What does that mean? I have to keep it high so that when you want to go get a home loan, it's expensive for you. If you're in South Africa, I mean, I don't know, but I'm pretty sure I saw the repo rate for the Reserve Bank, right? The repo rate for the Reserve Bank looked high. But remember, banks borrow from the Reserve and then charge you on top. So if the repo rate, which is a cheaper interest rate, is high, the rate that you guys are getting to do your home loans is too high. It's really high. So when they keep interest rates high, they make it expensive for you to get a home loan, to get a car loan, to get a business loan. Why? Because they want to cool off the economy. They want to slow down spending so as to drop inflation. That's why interest rates go up. And when an interest rate goes up for a country, the currency strengthens because foreign investors will pump money into that currency. Are you going to put money in a currency that will give you 1% return, or a currency that's going to give you 7% return, right? So you just keep following. Wherever the interest rate goes up, that's where you dump your money, right? So that's the whole point, right? They're trying to kind of like cool off the economy from that COVID printing area, right? So this is the problem, and you can see it in the data. Economy is still producing a lot of jobs, still maintaining high wages, still has a lot of inflationary problems. It's happening nonstop. Now, yields are the rate of return, right? So if you look at your 10-year yields chart, I've done this with you. I'm just out of time right now. You will see that yields are up because dollar is up, right? Because remember, as long as that's going up in terms of that, investors are going to come, pouring in, right? So it's something to look out for. But here is the most important part of this video. Because of everything I've just said to this point right now, I am calling Euro USD parity. What that means is I am a bear in Euro USD until we get to 1:1. This is going to be a crazy, crazy swing. If I'm right, not financial advice. You don't have to rock with me. And unfortunately, you are also 5 weeks behind me because I've started selling the euro, but there are going to be many other selling opportunities, and I want to take as many of them as possible. In 2020, the most traded asset on my trading journal was Euro USD. In 2021, the most traded asset in terms of forex was Euro USD. It's always been Euro USD for me. It's the most liquid. It's the most easiest to understand. It's the most sensitive. And I'm telling you right now, there's about 600 to 700 pips on the table if I'm right to the downside. Why? Because now, and remember, I taught you guys this 2 years ago, I taught you guys about monetary policy divergence when we're looking at USD JPY during the Ukraine-Russian war. I was like, listen, if JPY does what they do to their currency, devalue it, and we were hiking interest rates with the FOMC, you're going to get monetary policy divergence. And I'm saying something similar is about to happen to Euro USD. This is Euro USD on the monthly time frame. And I believe that price is coming all the way down here to 1:1. See this there at the end there? 1:1. That's where I think markets are going. USD parity. That is to say, as we maintain bullishness in the dollar this year up until election time, Euro USD has no choice but to go down. So I'm going to be focused on that. I'm going to be focused on that like a hammer on a nail. Every valid supply I get, I'm in. With or without you, video or no video, yes, but you gotta exercise it with knowledge, right? There'll be many times price will retrace. Like right now, markets are retracing, right? Right now, markets are retracing. This is an H4 supply that I'm looking at. That I'm like, yo, baby girl, you wanna play with me? I'd love to play here. If it doesn't work out, if not gonna play, I wanna play somewhere up here as well, right? All these areas, I'm really taking them. But once I'm inside a daily swing supply on Euro USD, I just want you to know, my brothers and sisters, like here, I'm not closing. Like here, I took a sell here, I did not close. Even if it comes all the way to almost stop me out of break even, it's fine. I'll get in again because I truly believe that my trade idea, my thesis, every year I have a clean thesis, I have a clean trade idea about assets in general after I look at the sentiment. And we'll keep looking over this throughout the war rooms, right? But this was a very good entry point here, right? Markets keep chopping out, consolidating, and then dropping. Chopping out, dropping. And I think we're going to go all the way until €1 is worth $1, right? Parity is all the way here. Now, what's interesting about this level, if you go to the weekly time frame, is you will find something that looks like this. Or is it the daily time frame? Sorry, right? There should be a demand there ready to catch price. Right, there we go. I know I'm not crazy. Right, so this is what I'm looking at, all the unfilled orders here. Look at this clean demand taking out 1, 2, 3 supplies. Like pow, pow, pow. Right, this is a very good place. This downward movement was set up here in November 2022. Right, so that's where I want to get out of all my cells. And I truly believe we will get here through hook or crook, through consolidations, manipulations, left, right, we are going there, right? So I'm a very big bear thing. But take note that on the monthly time frame, please take note that Euro USD on the monthly time frame, for those who are paying attention, has been in a range since 2003. Look at this. Look at this dude, man. Clean range, sideways movement. A risk-sensitive asset like Nasdaq has broken out of consolidation to the downside. Is coincidence? No, markets correlate. They correlate, right? So, however you look at it, if you can see a double top and a neckline, whatever your trading thing is, all I'm saying is there's going to be policy divergency between the European Central Bank, ECB, and what the FOMC is doing. We have macro fundamentals confirming that the FOMC will not be cutting rates for all the reasons I've just explained. And we know for the fact that ECB will start to cut rates from about June. So we'll see a massive divergence between the two. And if my fundamentals make sense, my sentiment makes sense, but more importantly, my structure is giving it to me. Remember, look at this, look at the euro. Come on, everybody. What, is this a bullish asset? Guys, those who are stubborn will remain stubborn, and that's okay. I mean, there's so many forex scammers, people don't teach proper things and all that stuff. I get it. If you think you can teach yourself market value, if you really think you can do what I do at the level that I do it without spending the next 10 years researching it, it's fine. But for those of you who are really serious and want to get a good sense of this, there's something called profiling an asset that you always have to study. This is a sell asset. If I plot my trading journal right now, you'll see most of the time my big swings on my most traded asset are sells, because in general this thing sells. So again, this is a big for anyone who is absolutely serious, right? As soon as I can get this done, right? Anyone who is absolutely serious and interested in really grasping this information, in an organized manner, please don't hesitate to check down the link down below, and then get access to our beginners course, right? This is literally, will walk you through everything that I've just done today, just to profile, to understand where price is going, to understand the different types of supplies and demands. It's literally organized in a nice fashion and will be updated. You just get there, you press the next video, you watch, you complete it. There will be assessments sometimes in there. Each video is recorded. Yeah, I didn't mean to play that, but you get a sense, right? Until when you're done with module 1, you start module 2, and so forth and so forth and so forth. Traders Edge. These lectures are detailed, right? It's for serious people. They are long, and they have got the information condensed into 68 hours. This is spending the next 10 years of your life trying to make profit in the charts, right? So this is a quick reminder for anyone who's really serious about their trading journey. This is where it starts. But I am calling Euro USD parity the trade of the year for 2024. We are taking Euro all the way down to 1:1 at least by the election time frame period. And so you can imagine where I think the dollar is going. I think the dollar is going up. And then you can imagine where I think what political party might win the presidential election, which would be interesting if my hint is correct. Because then we can start to ask questions about how much of this stuff is actually planned. But yeah, right. So you put all your stuff there, you put all together. One more time as a summary of today's video. 24 election is coming. Patterns don't lie. Elections have happened before. All the information is in the charts. Number 2, DXY is mad bullish. That means USD XX, USD JPY, USD CAD, USD this and that. All these assets are going to be bullish. So we're going to be looking for demands. Number 3, risk on. Risk sensitive assets are going to suffer. We're going to see drops. We're going to see crypto drop some more, I think. We're going to see Euro USD drop some more, I think, etc., as the parity and the policy divergence continues, right? So this is something to kind of like think about. The only anomaly is also pound fundamentals have changed. Right? So the pound, I've lost network again, but just quickly talk to you guys while everything else is resetting in the background. Pound fundamentals are looking inflationary, right? So Bank of England is going to do something similar to what the FOMC is going to do to the dollar, right? So it looks like, there's going to be slightly cooling, but the problem here is it's above market expectations, right? So the pound or UK, whatever, Britain, the Bank of England, BOE, right, wants inflation down to 2% as well. Not gonna, you saw how I did with the dollar, you do it the same way, just go through the data points. Once 2%, anything above that number, means that hiking, is not going to slow down, right? They're going to keep trying to maintain a high interest rate until they can get control of inflation. Now, if you look at GU on Forex Factory, you'll see that on the 16th of April, there's a bit of data also pointing towards that type of stuff, pointing towards inflationary stuff. And so that means when you're now trading pound USD, for example, you have to remember you gotta pick your assets smartly this year, because the dollar is bullish and the pound is also gonna be bullish until they figure out this inflation thing. So something like pound USD is gonna create a lot of ranges, a lot of stop loss hunts, because it's two bullish assets together. What you want to do is to use this information smartly. For USD, we're gonna focus on things that are obviously bullish. USD JPY, for example, USD CAD. For the pound, instead of trading pound USD, you're going to look at pound CAD, right? If you've been following the data, CAD is disinflationary, right? If you literally follow what the Canadian data is, they are starting to want to cut rates. They are seeing their efforts pay, and so that would be a perfect thing to trade. Something like pound CAD yeah, pound CAD is good. Pound JPY would be good. Pound AUD, would absolutely be excellent. And I just want to quickly prove this to you. I see my network is back. Baby, come back to me. Right. I do apologize for that, but it's just part of the process. I hardly ever have time to edit my videos. I'm just going to get them like this, and I know it sucks. And it's not YouTube quack standards, but I think we can all agree you'd rather have me spend time getting the information right than getting the videos super pretty. I think quality videos are good, but sorry. And on top of that, I have to stop the screen share and then take out the thing that I'm looking for. I'm looking for data points. There we go. Right. So that should be in front of you now. Okay. Right, so if you look carefully here, and let's go to Forex Live, for example. Let's see if we can catch a headline from last week, Friday, right? These are Fridays before markets close. Today is Sunday. Let's see if I'm right. Swiss National Bank Chair Jordan says monetary policy will remain focused on inflation. That's Swiss franc, right? CHF. Forex Live, Nasdaq index gets creamed as high flyers take it on the chin. We'll explain that. Fed's inflation, this is America, financial stability report, persistent inflation, tighter policy, biggest risk, right? There we go. Bank of Canada, right? Inflation is continuing to become less broad-based. Inflation is getting better and better. So they're going to start cutting rates. Now, 2024, my trade ideas, number one, Euro USD parity. That's my baby. Number two, my second trade idea for 2024 that I want to give to you is this is the theme for 2024 is rate cutting cycle. Whichever currency cuts their rates first, whichever currency, whatever, claims that they've got inflation under control and therefore are cutting their rates, that's the currency that's going to lose its edge first in the market. So you look to strike for that. So if you've got something like CAD saying inflation is continuing to become less broad-based, we can start to cut rates. We no longer need a strong interest rate. You want to be there, USD CAD with your buys, pound CADs with your buys, because you're dealing with USD and pound, very, very strong currencies, right? Because they're going up versus weaker currencies that are losing their edge, CAD, JPY, etc. So you really want to think around that. But those are my two themes that I hope to leave to you as I wrap up this video. Now, I think we've spoken about Bitcoin. I'm just going through everything I want to talk about. We didn't have a chance to talk about COT data, but I think if you have been preparing your spreadsheets without Leroy properly, you would note that your COT data is basically confirming roughly the same thing. I did see a question in my private Telegram group around gold. I'm so sorry I didn't respond. I just felt so bad. Responding to one person would mean I have to respond to everyone that I've not responded to in the last few months while I was away. And I just didn't know how to morally deal with that. I didn't know how to explain. I didn't want to make it look like this one question or one person is more important than the other. But in general, 365, I'm sorry I had to take a break. I needed it. I absolutely needed it. I am with you now for the next 3 years. I'll take a break again then, and this time I'll keep 5 months before my sabbatical. I'll start to announce it. I'm going to disappear for a year. When I disappear, it means just that my work phone goes into a safe. I'm outie. I'm gone. Like I really clear. All I want to do is read books, travel, spend time with my family, etc. Right. But if you go through the COT data, you'll see a couple of things with gold. Gold is, let's look at the charts for gold as we wrap it up. Gold is at a weird place, right? If you look at the COT data, it will look like they're piling on longs, but if you look at the color codes, the ones that I taught on that video, Master Trader spreadsheet that I did for you guys on the channel, you will note that actually gold is more neutral, right? There are a lot of longs, yes, but gold is actually more neutral. So it's not necessarily bullish. It's definitely not bearish. It's also at an interesting place, right? So for me, when prices like this, like what am I supposed to do, right? I did tell you guys that we're going for 2.5 before I went on my break, and look at that, we're on 2.4, doing very well up there, right? So I don't know. I wouldn't be selling until I have clarity on my sales. I know a lot of money is being pumped to the dollar, but because of a war, right, safe haven flows, right, gold will be strong, right? So I would want, a much more longish term buy. So I'd need price to fall for a while. So right now with gold, as a swing trader, I'm doing nothing. I don't think I have any more positions open. I had gold open for years. Those of you who saw my screenshots a long time ago, I mean, I had these incredible good positions, which I regret closing. Because when we came back to this all-time high, I just felt like I was going to wait for another 3 or 4 years before I got to my target of 2.5. So I regretted that so much. But yeah, this is doing well. It just depends on where you are, right? So this cluster here is not clear for me. I mean, this could just be a consolidation and more upside, but what's the room? Like when you find price like this, especially at an all-time high, I mean, what are you trading? Like, what are your optics? How do you know, right? Because remember, for us as 365 to put on a trade, there's so many things that need to be done. The requirements, one of them is 1:3. How do you know price is going to get to 1:3, right? You like, based on what? Based on that, that's what you wanted to do? Like there is no price action. Gold has never arrived at 2.6, right? So how do I know I'm going to get it? How do I know? I could be stuck here for the next 7 years. Price could turn against me. So there's nothing I can do. But if I come park a few buy orders here, which are risk-based, risk-wise, then I'm like, okay, this is how far you've gone. This is your high, right? And you've created now clearly a slight small liquidity pool. And it looks like you're going to do the same thing again, right? This to me now says, okay, if you were to come down there, I'll definitely get, 1:5. But all I need to stay consistent in my life is 1:3. So this is better. I'll target something like that. And I'm just answering the gold question and I don't remember how it was phrased. But more importantly, I'm sorry for not responding to you and to everyone. I was on a break, much needed break, and I'll cover that more in my next video. Right? Please, if you're into crypto and you're buying, you should be buying and holding on a secure, on a cold wallet, please. Cold wallets. I'm telling you, I'm helping you. If you need a cold wallet, let us know. We can provide. We'll check with our stockists and all that stuff. But if you don't have to buy it with me. Buy a cold wallet. That's all I'm saying, right? But I can sell you the ones that I use, right? I love Ledger. It's freaking secure. It's amazing. But here's a meme coin I think you should think about. Here's a meme coin. This is just to say thank you for watching this video. I once told you guys about ICPU in one of my last videos, and you're welcome. You've seen how it's performed in the last 2 years. Baby, right? So at its highest point, it got to $4. It got to $4 US, right? Right now, we are here. All right. So if this breaks to the downside, of course, we're going to see more pain, right? And like I said, I'm not surprised to see more pain in the crypto market right now. But if this continues to the upside, at least to this high point, we're looking at 160% of a movement. And if it goes to challenge its previous highs during the bull cycle, which is not supposed to be a one-day event, we're looking at 5, 6, 7 months ahead of time here. We're looking at about almost 400%, right? Why? And this is like a 29 cents right now to the dollar, right? This is a very good meme coin. Buy it, don't buy it, make money, don't make money, lose money. It's all up to you. I just promised you that at the end of this video, I was going to give you a meme coin that I can't stop pumping money into. And this is interesting, right? So once we clear this area here and we break out of this structure, I expect happy days. 3, 6, 5. My name is Leroy James. My series, Shake My Hand. If you made it to the end of this video, I promise you the videos are going to keep coming. I don't know if they're going to get any shorter, but they will be worth it. Thank you for watching. Shake my hand, and I'll see you next time. It's good to be back. Peace.